Oldham is facing another lockdown after a spike of COVID cases.
Very depressed, very depressed. First of all, if you look at the Oldham town centre's businesses, I think so many businesses are closed and some businesses going to be closed down, and our earning is rely on the opening of the town centres.
Just as businesses were hoping that the worst was behind them, there's another roadblock ahead. It's a reminder of just how fragile our nascent economic recovery really is.
The poverty of this town is very high. Unemployment is high. We need jobs. We need a better prosperity. We need a good jobs, and we want to make a good citizen of this country.
We learnt today that economic output fell 20.4% in the second quarter, an enormous drop, and one that after a fall in the first quarter puts us in a vast, unprecedented recession. But we knew that already, really. We saw what weeks of lockdown did for economic activity. The question is, what more do we know now about the potential direction of the recovery? This is an index of economic output by month. The level of GDP plunged in March and April as the country locked down to battle COVID. A small pickup in May was followed by today's figure for June, an 8.7% jump. A promising sign, but one that also shows just how far is left to travel to get back to where we were. Real-time data suggests the bounce has continued over the summer, pointing to a strong third quarter. But with health worries still hanging over the country, particularly as we head into winter, that robust growth may be hard to sustain. Here are the Bank of England's latest forecasts, which show the UK economy getting back to its previous level after 9 quarters. That would be faster than the early 90s recession at 11 quarters, faster than the recessions of the 70s, and much faster than after 2008, which took nearly 5 years. The UK's slump has been worse than most other developed nations. A faster fall could mean a faster bounce, but the recovery so far has also been very uneven, with sectors like accommodation and food services in the doldrums.
The Prime Minister, the Chancellor and a number of Cabinet Ministers are quite quick to say that we are a service sector-based economy, so we're likely to have suffered more. But first of all, the US economy showed only half the decline that we did. And if that is the case as it is, then they should have thought right from the start about more subtle, selective forms of lockdown. The countries that have handled it best health-wise are the ones who've had the best technology and with it, the best localized approach to testing and tracing. We've got to have a system where everybody really believes that this can be dealt with, which in itself inspires more permanent confidence, particularly amongst consumers, but also amongst businesses that have to consider investing.
The Chancellor today said he still thinks that furlough, that ultimate protective policy, should end in October. At that point, the health situation is still likely to be unpredictable. Overall confidence may need a boost from more stimulus. In some sectors that simply won't recover, the government will have to handle large-scale job losses. And some sectors, even some regions, may still merit targeted protection from the ongoing COVID impact. In other words, it could still get more complicated. Oldham's drivers are contemplating what a slower town centre again might mean.
But actually, is our business and is our survival. We have suffered heavily in this respect. So obviously, you can see nobody's here at the moment.
Another blow to earnings, another blow to confidence that the economy can ill afford.
Helen Thomas there. A little earlier I spoke to the Shadow Chancellor Anneliese Dodds and asked her whether the fact that the economy had grown by 8.7% in June showed the recovery was underway.
Well, it's most definitely good news that the economy is growing. We desperately need that, of course, and we really particularly need it given the depth of the lockdown and the impact that it had on our economy. Of course, it was a necessary lockdown given the public health challenges that we faced. So it is good to see growth returning, but concerningly, when you look across those 3 months, the UK has, on average, had the biggest fall in GDP of all of Europe and indeed of the G7. So we do seem to be experiencing a deeper recession than comparable economies. We really need a different tack to be taken now.
Isn't that because we're just a bit later on in the process? For example, France or Italy, as you say, several percent below the UK GDP contraction for that period, but they went into this earlier and they're coming out of it earlier, aren't they?
Overall, when you compare the UK to other countries, we've also seen a very intense hit from that first wave as part of the lockdown. In fact, the OECD said that we are likely to have had the most intense impact from the first wave of coronavirus, and we would have one of the most intense impacts from a second wave as well. So just as we seem to have been an outlier, very, very sadly, when it comes to excess deaths, we now seem to have a double whammy in the UK as an outlier when it comes to the depth of our recession.
I'm interested, though, in what you as Chancellor would have done differently or would be doing differently in the months ahead, because Rishi Sunak seems to have pumped enormous amounts through the furlough scheme, rent and rate holidays, VAT, stamp duty, eat out to help out. I mean, there are so many different schemes involving hundreds of billions. Would you have spent more?
We wanted to see a wage support package like the furlough scheme that was brought in. I mean, we hoped it would be flexible from the start, but at least it was set up. The same with the self-employed support scheme and some of the loan schemes. We called for them. We worked with government to try and make sure that they were put into place. But the critical time is now, and making sure that public spending is appropriately targeted to protect our economic capacity. Now, the Chancellor announced as what seems like a last-ditch measure, rather panicked measure, the job retention bonus, a payment to every firm for every member of staff who's come back to work who's been furloughed. That is not a well-targeted measure. It doesn't look like it's going to incentivise companies to keep workers on. And actually what we need now is that targeted funding to make sure in those critical sectors that have a viable future, that there's wage support provided so we don't lose those jobs and lose that economic capacity.
I mean, broadly speaking, is this the Treasury at the centre? Is this local? I mean, how does this actually work in your view?
Well, of course, it depends what exact issue we're looking at. If we're talking about support for sectors that are especially badly hit, we've said to government it needs to do something similar to what we urged it to do when it created these economic packages in the first place. It worked with trade unions, with businesses, and it made sure that together there was a consensus about the way forward. You know, not a system that necessarily every single actor thought was perfect, but at least something that worked for the UK's economic capacity into the future. They need to be doing that now when it comes to identifying the support that's needed for different sectors. We need to acknowledge... Sorry, go on.
Eat out to help out, that's targeted, isn't it? I mean, lots of these measures are quite targeted on specific industries.
So, yes, we need those incentives, but we need to have confidence as well. But, in some particularly critical parts of our economy, I would say especially in manufacturing. Now, I was visiting some manufacturers in aerospace over the last few days. Once we've lost that capacity, that industrial capacity, it will be very, very expensive and difficult to build it back up. And government is not targeting support currently to those core industrial sectors.
Anneliese Dodds, thank you very much.
It's a pleasure.
So joining us now is the former Conservative Chancellor, Ken Clarke. Welcome and thank you for holding on. Ken, if I could ask you first, I mean, look, this is going to be a long haul, isn't it, back to recovery for the government?
It is. I mean, the worst is now starting, and this autumn is going to be very difficult indeed, as Rishi was conceding. People are going to suffer hardship. It will take a few years to get back to a properly healthy economy. Meanwhile, we have quite a crisis on our hands, and I do agree that it will require more borrowing, more printing of money. I think that's unavoidable at this stage. You've got to be careful how you do it, because that will become a problem eventually, which you'll then have to tackle in, we don't know how long it will be, 2-3 years before inflation starts coming back and interest rates start going up. Meanwhile, targeted assistance, particularly at the jobs market, and particularly to protect the employment of as many people as possible, get new employment for them, and also very carefully targeted support, not for the dying industries trying to keep them open for a bit longer, but everything that looks like having a proper future, and actually also having regard to whereabouts in the country you're targeting these things to try to make sure you don't lose sight of the levelling up, because some parts of the country are already quite depressed.
Your emphasis on targeting echoes that of Anneliese Dodds. So do you agree with her that...
No, I picked that up from her. It's the first time I've heard her suggest what she would do. I actually personally do think that you can't just keep printing money, and the Chancellor is besieged with lobbying. Absolutely everybody, particularly industries with no future whatever, will start demanding more money. What actually is going to be the real key is targeting the support and having policies on things like, firstly, dealing with those who are going to lose their jobs, at least 2 million of them, particularly the young, leaving university, leaving school, trying to get into a jobs market. I think even more importantly, the middle-aged, people who had good, secure jobs, quite comfortable, were pleased with their jobs, now suddenly find themselves redundant. And it's not easy for a 50-year-old to go into a market like this.
In terms of
retraining, reskilling, and a job support programme.
Sorry to jump in, but in terms of how we got here, and with hindsight, do you think a lot of money's been wasted in the past few months? I mean, the job retention bonus, for example. Is it the fact that...
Well, 2020...
Please, go ahead.
2020 hindsight enables all to see every government in the Western world, every democracy has made mistakes, because you can't just sit around thinking about things when you're in the middle of a fast-moving crisis. But I think the furloughing scheme, the first package he put out, was absolutely brilliant. It was staggering in scale, fully justified, and heaven knows where we'd be now if he hadn't done that. That was absolutely brilliant. Some of the later things, I agree. I don't think the £1,000 for everybody being kept on really makes much difference, because nobody's keeping on people they wouldn't have kept on otherwise. I think these free meals, or £10 off the meal, is a bit pointless. It's obviously to try and help the restaurants, but it's the caution about safety that's making people reluctant to go back to restaurants, not that they need £10 off. And I actually think the holiday on stamp duty has caused a great boom in the second homes market, but I wasn't very pleased with that either. But everybody can second guess these things. The next package, the autumn package, is the most difficult, and that's when we need targeting. And I've already suggested retraining, reskilling, and an altogether better system of advice and help in getting into new parts of the labour market that hundreds of thousands, millions of people are going to require.
Ken Clarke, that sounded almost like a manifesto. Thank you so much for that.